Imagine this. You buy a property to use as a short-term rental, thinking you've made a great investment. You're expecting steady cash flow, long-term equity growth, and all the tax benefits that come with short-term rentals. And then, within months, the city bans short-term rentals. What do you do? For most investors, that's a nightmare scenario. But for one couple, it turned into one of the most profitable pivots of their life. They bought a property for $650,000, and just months later, they sold it for $1.3 million. In this video, I'll show you exactly how they did that, step by step. You'll see the before and after photos, the specific upgrades that created hundreds of thousands in forced appreciation, and the exact strategy that let them walk away from this property without paying any taxes along the way. Stick around because I'm going to show you how to protect yourself when real estate doesn't go according to plan. Their plan was simple. Buy a short-term rental, generate great income from it, build equity, and take advantage of the short-term rental tax strategy to save big on taxes. And they weren't just guessing. They were our students and they were following the exact strategy we teach. But here's the thing that we always emphasize. Real estate is unpredictable. Regulations can change, markets shift, life happens. If you don't have a backup plan, you're exposed. That's why from day one, this couple built in flexibility. They didn't choose this property just because of the location. They chose it intentionally because of its potential to force appreciation. Meaning, if short-term rentals didn't work out, if their plan didn't pan out, they could still win by increasing the property's value. And that's exactly what happened. So let me walk you through their property, before and after, and show you how a few smart upgrades created massive returns. Let's start in the kitchen. Dark cabinets, dated flooring, and paint colors that make the whole space feel small and closed off. It looks tired, right? This is what the property looked like when they bought it. Now look at the after. Bright, airy, modern. Fresh paint, new flooring, and updated finishes completely changed the feel. And notice, this wasn't a gut renovation. Just smart, intentional upgrades that created a night and day transformation. Buyers don't just see a kitchen anymore. They imagine themselves cooking here, entertaining friends, and that vision is what sells. Here's the living room before. Same old floors, dated paint colors, older furniture and decor. The whole space feels weighted down. And here's the after. The exact same space, but it feels twice as big. Lighter colors, new floors, and contemporary furnishings made the room feel clean, open, and inviting. This is buyer psychology in action. It's not about adding space, which would add significantly to the cost. It's about creating the feeling of space, which you can do without spending a lot of money. Here's one of the bedrooms. Same story. Dark paint, old carpet, and nothing that makes it stand out. And here's the after. Notice the neutral colors, brighter tones, and updated flooring carried into the bedrooms. Buyers want to feel calm, peaceful, and at ease in their bedrooms. And that's exactly what this update delivered. Now let's head outside. Here's the backyard before. Plain, unremarkable, forgettable. Just a typical yard. And here's the after. A pool. And not just a pool, a lifestyle upgrade. In a vacation market, this one feature doesn't just add value, it completely repositions the property. Suddenly, it's not just a house, it's a destination. Now, none of this was random. It was all part of their strategy. This is called forced appreciation. Unlike market appreciation, which depends on the market going up, forced appreciation is value that you create. And here's the key. Forced appreciation gives you control. You're not waiting for interest rates to drop. You're not hoping the economy picks up. You're actively increasing the value of the property through improvements, better management, or new income streams. Now think about this property. The couple didn't do a major remodel. They didn't knock down walls or add square footage. They painted, they changed the flooring, they modernized fixtures, and they added one big ticket feature, a pool. And the result? A completely different property in the eyes of buyers. That's forced appreciation in action. And here's the best part. Forced appreciation is scalable. You can do it with a single family home like this couple did. You can do it with a duplex, a fourplex, or even a 100-unit apartment building. Every upgrade that increases rents or improves resale value boosts your return by creating equity intentionally, not hoping for appreciation. For high-income earners, this is especially important. Why? Because you don't want average returns. You're used to excelling in your career. Forced appreciation lets you excel in real estate too, by creating equity intentionally, not hoping for appreciation. But here's where the story goes from great to incredible. When they sold the property, they could have paid a massive tax bill on that $650,000 of gain. But instead of writing a massive check to the IRS, they used something called a 1031 exchange to avoid doing that. Here's how it works. When you sell one property, you can roll the profits into another investment and defer the taxes. You're not avoiding taxes forever, you're deferring them. kicking the can down the road. But while those taxes are deferred, your money compounds inside bigger and better properties. So instead of losing hundreds of thousands of dollars to the IRS, they reinvested every dollar. In this case, they traded that single-family home for 2 fourplexes in a different market. That's 8 units total, which means more income streams, more diversification, and more stability. That's how you scale. That's how you grow from one property to a portfolio of multiple doors. And if you want a full breakdown of 1031 exchanges, how they work, what the rules are, and how you can use them to scale your wealth, check out our video on 1031 exchanges here. At the core, this story is about one lesson. Always have a backup plan. If you buy a property counting on one strategy, like short-term rentals, you're gambling. A regulation can change, tourism can slow down, platforms can shift policies overnight. This couple had options. They chose a property with upside. They forced appreciation. They had flexibility. That's why they could pivot quickly and profitably. Flexibility is your safety net. It can mean the difference between a costly mistake and a life-changing win. If you're a doctor, business owner, or other high-income professional, this is why learning these strategies matter. This couple didn't just survive a regulation change, they turned it into one of their biggest wins, and you can too. If you want to learn how to find great deals, force appreciation, and use advanced strategies like 1031 exchanges, check out our Zero to Freedom course. We've taught thousands of high-income earners how to do this, and it could change the entire trajectory of your financial future. I'll drop the link below. Don't wait for a crisis to force your hand. Learn how to invest with flexibility and build wealth on your terms. And share this with a friend who's buying a short-term rental. This video might just save them from losing a fortune. Thanks for watching. I'm Dr. Kenji Asakura, and I'll see you in the next video.